Hello traders, let's start our weekly market review. Today, first of all, we will talk about predictions of the previous week. We will measure the most important changes which happened in assets that week, and also I will make predictions in crude oil, Brent oil and natural gas. I see there a potential for the movement. Okay, let's start, and now I want to show you sugar. As you remember, we focused on this market tick imbalance which happened on Friday, and then on Monday we also had a new one which occurred after testing of this mirror level and the second breakdown of this demand level, and then market went to our target. Also, we spoke about Mexican peso and the ice line which I mapped here. It was broken. Really, the market a bit closed below this level, but then we saw very fast rejection, and this asset went sharply to the upside. So very strong limit buyer here bought back the asset, and now we see new highs on the daily chart. Even on Thursday there was bid tick imbalance after divergence of delta, which informed about the potential upside movement. But it was difficult to hold this position, as this tick imbalance on the other side informed about the probability of the correction. In this case, I still expect the correction in this asset. We have this divergence of deltas, and even after this level of resistance, which was retested as a mirror level, will be broken, I expect that the market will go to the downside, because it seems to me that here liquidations of short position is underway. So let's continue. I want to show you also interesting imbalances which I see in British pound, for example. 4 days in a row we see accumulation of market sellers and at the same time divergence of deltas. So I also assume that if this level of ask HFTs will be broken, we can see the correction. But according to options, very huge in the money call position was opened on the strike 1.22 during the last 3 days, and so traders, professional traders, expect that British pound will go further to the upside. But as we trade manipulations, of course, some shakeouts are possible of buyers, and if this HFT's level will be broken, the shakeout can be of these stop losses. If not, of course, the price can go further and further. Then Japanese yen, I see strong divergence of deltas, very strong. And on the daily chart, imbalance in options was on this level. Hedge funds continue increase short position in Japanese yen. Also in the money, put options were opened here. A lot of sellers, so the pressure is strong in this asset. I always recommend to buy such option constructions as straddle or strangle when the price is in the point of high emotional pressure and it cannot stay in this place for a long time. Australian dollar, even more than 4 days in a row, market sellers are so active. And what do we see on the daily chart? Very significant, very valuable increase of market sells of hedge funds. Here we see 30% of shorts they added according to the COT reports. Open interest continue to increase each week. Here was the trap of market sellers. So hedge funds are in this trap, and also very big adding of open interest in options. Here put options and call options. More in put options, and as we see on Friday also, the volume in put option was 10 times more than call options, 3,500 320 and in call options only 305. So very interesting situation to find out some shorting opportunities here. What about oils? Crude oil. Here we see a small tick imbalance which occurred on Friday, and after divergence of deltas, what do we see on the daily chart? The picture is bearish, technical picture. The market worked out this zone of sellers. So according to these algorithmic purchases here, I assume that after this small tick imbalance, the market will go to the upside. In crude oil, it is not so obvious. A more beautiful picture I see in the Brent oil, because this tick imbalance was more significant and the market closed a bit the point where it was created, and also that algorithmic purchases which we saw on Wednesday. So from this imbalance 77, 77.40, this target is absolutely real. And then we can also see the correction, because this HFT was in level. Here we have level, and somebody shorted in this liquidity. So I assume that first of all we will see the movement to the upside, and then we will see the movement to the downside. That is my market view according to Brent oil. And what do we see on the daily chart? Clear market resistance, and of course psychologically it is difficult to buy in market resistances. So I think that first of all there will be an attempt of breakout of this resistance to involve market buyers here, and then continue to move in this range. What about natural gas? Hedge funds bought during a long period of time, and that week was the maximum close of these buys. The market closed under the commercial level where hedge funds made purchases. This average price here. Here hedges were opened. So hedge funds, if they closed their buying positions, they expect that the price will go to the downside now from here. But if this commercial level will be broken, it is level 2.315, this ask zone, if it will be broken, they will continue to purchase. So the market will go to the upside. I even expect that it will go to the upside from here, because often I see when hedgers become disappointed in some price movement, and they are really disappointed now if they closed their purchases, the market starts to move in that direction. I think that there will be the third wave after this imbalance which we see on the options market was here in block trades, and here on the futures market. So that was the first volatile wave, now the correction, and then there will be the third wave. So traders, that are my predictions, my preparations for the second week. If you have some questions, you can leave in the comment section. If you are interested in market analysis based on the order flow and volume analysis, you can subscribe to my YouTube channel and receive them every week. So have a nice trading week, and see you on the other side in my next focus. Goodbye.